All right, everybody, welcome, welcome, welcome. So, this is a brand new year, and we just got dropped earlier this morning Tesla's production delivery numbers, and it's a record quarter and it's a record year. So, we've got the folks here that you want to hear from. This is Jeff Lutz. As you know, he is a manufacturing supply chain expert. He's worked at at least three of the major Fortune 100 companies. And then we've got Hans Nelson joining us as well. And he's got his own YouTube channel, Hansi Nelson. So, Jeff, everybody has been wanting to hear from you. They want to know what you thought about these results. Let's go right to the answer this morning from Tesla. So they showed that we produced approximately 495,000 vehicles and delivered 484. So the 495 and the 484 numbers. And this means that in the full year 2023, they hit their goal of 1.8 million, and they hit at 1.81 million of deliveries. This is 38% year-over-year growth. But as we'll show later, we're going to show that they're right on track with the average yearly growth rate of 50% they're looking for. But this is in a year that is absolutely crazy, right? They had the high interest rates, they had to cut prices. And yet they came out here with fantastic numbers. January 24th, we're going to finally hear from them, also the financials. But right now, let's talk production delivery. Jeff, what did you take from this?
Yeah, I like that the top line numbers beat all the consensus views, whether it's the Tesla compiled view, the Bloomberg view, the whoever's view. I like that everything was kind of a nice clean beat. You know, that delivery number probably would have been closer to 490 if that ship that had whatever stink bugs in it that was going from Shanghai to Australia was able to dock and to unload. Instead, they had to turn that thing around. So you have, when you're running a supply chain and you have a risk and opportunities sheet you're working from basically the entire quarter, and it gets really intense as you get towards the end of the quarter. I'm sure that was not on anyone's bingo card. So there really wasn't much of a contingency. Normally when you have a list of risks that you can see, kind of in advance, you can put together a set of opportunities, maybe some discounts or sales or accelerated supply distribution to offset what was going to be happening there. But overall, just what it could have been 490. It was a great number. It beat everything. Record quarter, record year. And to me, this is really putting the company in a great position going into the following year, because a lot of the, I think a lot of the risk and a lot of the concern was really about a year and a half out prior to this, when there was forecasting recessions and so forth. And a lot of that, some of that is still out there, and it'll be interesting to see the other automakers report. But this was a really good quarter. And if you look at the numbers, I thought the production number could have been a little bit higher. But when I look at the inventory, I still think they're in pretty good shape. I think they're actually undersupplied in inventory, to be honest with you, given the next leg of sales and production that they need to do. So I actually think they need to step up inventory a bit. But we'll see as they actually report the official days of inventory in the third week of January. Finally, just on margins, it looks like the other vehicles category with S and X and Cybertruck, but mostly really S and X was a significant beat, and that should help the top line a lot. That should help margins. The low lease rate should help margins as well. So Q4 may have been that trough quarter, or it may be the surprise quarter that at least I've been forecasting in the second half of the year on margins. We'll see. There's a lot left to be told.
Yeah. So Brian Wang pointed out to me this morning that the 5,000 beat in the Model Y and X could actually bring $400 million in net profit, and he's estimating 2% in margin. So we need to confirm that that's the case, but that could be significant here, the difference between production and deliveries, because they were able to sell all the inventory that they have. Hans, what do you think? How important is this that it was a beat against at least expectations, and then just setting that up for the future?
Yeah, I feel like it's a good number that, even at the beginning of the year before all of the craziness happened with interest rates and everything, that this was the goal that Tesla set. And so it's good that we were able to actually, meet the expectations of the original guidance that Elon had put out there. I think that's good. I appreciate being on target for the 50% average compound annual growth rate for vehicle deliveries. I think that's another good thing. Um, and it's nice to kind of have a little bit lower base, moving into next year. I really hope that we see good things this year for scaling and just continued. I think this is one of the things that I have um, been somewhat projecting is that we'll see improvements not only in volume for 2024 over 2023, but also in margin. And that's just based off of the existing fleet. That's without any introductions of new models. And so I think this kind of puts us in a good place to do that. I am curious actually to hear from Jeff, the slightly lower number in production for Q4 than you expected. Do you think that part of that is coming from a drop in Model 3 production out of Fremont in preparation for the Highland launch in Q1? What are you thinking there?
Yeah, I mean that's one thing that could be they want to do more of a kind of a clean cutover for that model. It could be a number of things. I would have thought they would have built more inventory for this point of sale credit, for this going to point of sale in North America on the Model Y. Tesla's going to be in a really strong relative strength position as it relates to this credit because most of their lineup qualifies. I think Rivian's in good shape, and a lot of ones that dropped off were from the other automakers. So a majority of this credit is actually, if you're in the market for an EV and you want a free $7,500 from the government and you qualify, you're going to actually be in a much better position. If you're for Tesla, they're going to be in a much better position relative to the rest of the EV manufacturers for this credit. So they're actually doing, even though the two versions of the 3 dropped out, I still think they're in great shape. So bottom line, I thought the production number would have been higher. The Model 3 transition can be one thing, but I thought they would have built up a little bit more inventory. Everybody thinks inventory is a bad thing. When you're looking at sellout velocity and you're looking to increase that sellout per day, you're going to have more nodes of distribution with more product. It's just that simple. And it's not like you want each node to have one car. There's certain thresholds and levels that need to be met so that they can meet their sellout velocity goals. So don't be surprised to see relative inventory climb. It did climb throughout the year. And I would say gross inventory to climb. Relative inventory has been in line the entire year. But don't be surprised to see that. So that was the only surprising thing on production. I think they could have possibly done more. When you're doing record after record in each quarter, they're probably discovering and breaking new things while they're doing that. And remember, they have to balance, this vector. It's not just build as many cars as possible. It's that, well, you got to hit this gross margin level, so you've got to be careful about your overhead costs, and then you've also got to hit, your quality targets. You've also got to hit costs. So there's other things to consider.
Yeah.
So in
So
your
I just,
expectations for growth in inventory, Jeff, is that really because you expect more points of distribution, like more nodes as you're talking about? Or is it because you think that the transition of that credit to being at point of sale, is that going to increase the sell-through velocity? What's the primary driving factor that you see that will necessitate increasing the inventory number?
Yeah, I mean, it's those two things. If they're going for, let's say the range they're going for is 2.4 in total for the year. And if you look at the relative distribution of EV, it's nowhere close to being in full distribution globally. It's nowhere close to being in full distribution in the United States, by the way. If you really look at the concentration of sales and where those occur, and you look at the availability of the product, it's really centered on the coast in the United States. And then just you extrapolate that out globally, there's there's entire countries that don't have access to EVs, and there's infrastructure issues and so forth. So I think it's going to be a combination of the two. I think the point of sale tax credit's a big deal. It's going to be much easier for the consumer. They're going to be able to drive off with that $7,500 out of the price. I mean, you're going to be getting a Model Y, for mid 30s. I mean, that's going to be a big deal. So I would have thought they would need to build up more. I think they will build up more inventory for that. So again, maybe we'll hear more color during the earnings call. My guess is they may have run into some supply challenges. They could have run into, always as you kind of stretch and expand that balloon, you find new limiting factors that you've got to work through and deal with. So, and again, they've got to get everything right, cost, quality, everything at the same time. So it's not just, build max out. So, but anyway, I wanted to hang on that fact. I think it was a great quarter. It was a record quarter of production, pretty significant bump up. And if you just extrapolate that that production out, I mean, they're in pretty good shape. But they're going to have to, have to be a pretty big step up as well. That's why I thought there would have, in for 2024. That's why I would have thought we would have been over 500K, because they're going to have to, to get to 2.4, 2.3, 2.4, have a supply chain in that position to be able to do that. They're going to have to get some pretty big quarters going in the next couple of quarters.
Let's talk deliveries and stink bugs. Can you guys explain what happened? So deliveries for Q4 was 484,000. Apparently there's 6,000 cars that was delivered from China into these shipping containers heading to Australia. But Australia made them turn around because they had stink bugs. So Jeff, if that landed, would that have been considered deliveries at that point, or were they where would that number show up?
Yeah, it would have been the closest. It would have been production. Deliveries would have been nearly right on top of each other.
Wow.
And yeah, it would have bumped the deliveries up to 490.
Wow. Okay, so let's see. We got here 2023. Now, what do you think about this? People are saying, why are they not breaking out the Model 3 and Y? Why do they have other models? And what do you guys think about Cybertruck? Where does that fall into this?
I'll just make one comment. They're not obliged to break anything out, so they can break it out how they want. For Tesla, I mean, I'm assuming they're one of the most overanalyzed companies, probably the most on the planet, and they're probably just trying to, like, here we're gonna, these are different segments. This is how we're gonna break out segments. I'm assuming when the Cybertruck is meaningfully ramped up, they'll break that out into its own segment. The one thing that was a little bit disappointing was not to see energy broken out in P&D. Maybe we'll see this now in the earnings call, but I'd love to see energy broken out so we can start seeing the progress there. I mean, they shipped a significant amount of mega packs and power walls, and a lot of energy was shipped in the quarter. It'd be great to see a breakout of that. When I look at just the delivery numbers, I liked the S and X, even though this isn't like, it's not on some major growth trajectory. I will tell you this though, that price change that occurred it was basically the first week of September. So this is what I was telling people in Q3, like, hey, why weren't the numbers much bigger for S and X in Q3? Well, the reason is as soon as you saw that price change and you order one, you're probably getting it in October. And sure enough, look at the uplift for S and X in Q4 with that new pricing. So if they're decently profitable on that, and they've been probably running those lines nonstop in Fremont, that could be a nice uplift for an unexpected uplift for the company, as you said, as Brian Wing said earlier. So that was good, and the lease number as well. I was actually surprised to see the lease number be that low because they had outstanding lease deals. I mean, they had amazing lease deals. I was surprised to see the number that low.
Okay. And then just to get everybody up to speed again, this morning, Tesla reported their production delivery numbers. Their production is 494,000, almost 495,000 in Q4, and their deliveries was 484,500 in Q4. This brings them to 1.81 million cars delivered in 2023. that is right on, ahead of what they were hoping to get, which is 1.8 in a very, very, very tough year. Jeff, do you want to just talk a little bit about that? Like, I mean, their forecast of 1.8, and they made it happen. Despite what happened this year. What's your comments on that?
Yeah, and I mean, with 11 rate hikes in a record time, what people understand is they try to look at the gross change in vehicle cost from the rates pre-rate hike to the peak rates when they're 5.25, I think, Fed funds rate. That's not the only piece. Loan rejections were at a record high. I think they're over 15%, like a multi-decade high. So, basically, 1 out of 6 or 1 out of 7 people that went in to apply for an auto loan were rejected. These are people that could have been, wanting to buy a Tesla. So you couple those things, and you just had a very dynamic environment with just Tesla's pricing moves, and you saw what they were doing in China in Q4, which was successfully increasing pricing, and there was definitely some instability there with their pricing, and consumers trying to guess, well, if I just wait to the end of the quarter, am I going to get some amazing deal? So the macro backdrop, you had the media just nonstop saying that EVs aren't as good as people thought they were, and of course, if you're not in this very small bubble that we have on X, where we talk about EVs and we talk about Tesla and other EV manufacturers, you're not going to know what's right from wrong. So you had a media backdrop, you had a macroeconomic backdrop, and that macroeconomic backdrop has not eased. They haven't cut rates. So we've had some loosening in rates over the last month or two. But in terms of the Fed funds rate, it hasn't changed. So, I think the macro backdrop for the prior year was definitely challenged. Yeah, the media backdrop was challenged. You had whatever people want to prescribe to Tesla brand and Elon that could have been challenged at times. I'm not putting it's hard to analyze and say that that's one number or another. It's just a variable like to think about. But you had those kind of set of challenges against it, and they still made the number. I liked that they guided to a range, because as you get into these larger numbers, it's more difficult to kind of pin down one number. And my guess is they were guiding their supply chain closer to 2 million, probably through the midpoint of the year, maybe into the third quarter. And then at some point they saw some relative, they saw what that number was going to be, and then they started, changing their orders to suppliers. But yeah, I thought the macro, the media, and some of the other, backdrops were challenging, but they still persevered and pulled through. And that was great.
Yeah. And then can you explain this, which is the operating lease accounting, 2%, and basically 2%, which is apparently a record. This is really low. Can you explain how this impacts the financials and what it means?
Well, it means that more cars were purchased with a loan from a bank or with cash, which means that there's the top line for Tesla. The sales, the revenue number may be better, than we would have if anybody was forecasting 3 or 4% for that number. So the top line could be better as a result. I can't explain why. That it is what it is. I mean, Tesla does not allow you to buy the vehicle off of lease. I don't know if they've changed that for S and X, but that could be one factor as well. But there's some really good lease deals on the 3 and Y. So I was actually surprised. But from if you're talking about earnings should be not earnings, sales should be favorably impacted by that low number.
What do you think about this? What Roger just said here. We know there's a boatload going to Australia in Q1. So because it was missed as stink bugs, it was sent back to China. When it does arrive, does that mean, do you think that just gives it China Q1 even a 6,000 delivery lead?
Yeah. Yeah, as long as they can clean it up, they'll clean it up, they'll turn it around, they'll get it back. And yeah, it was
Might turn
basically
out to
pulled
be
out
a
of.
good thing. Yeah.
Well, yeah, I mean, yeah, those car. I mean, there's a home for those vehicles, so you always want that. So yeah, that's maybe over 1.5% of the quarter right there.
Anyways, to finish off the leasing, the 2% leasing, is that going to be impacting margins?
Revenue for sure. Margins,
Top line?
I don't see it. Yeah, the thing that'll impact the margins are the heavier SNX, I believe. And quite frankly, the fact that they'd made their pricing move very early in October, and there were really, really small moves too on the 3 and Y, and then throughout the rest of the quarter, they were increasing prices. Again, pretty small moves relative, but really prices stabilized, I would say. Versus, remember, when we started the year in January, mid-January, we had a huge price reduction globally. And then we had another huge one in April to start the second quarter. And then everything turned into really, really small, much, much, much smaller numbers. And to me, that was Tesla stabilizing the top, the MSRP line, knowing that they could hit their 1.8 meter, exceed their 1.8 million number. So to me, now we have some of the answers to the questions on the test. They can hit volume with where the pricing is today, and now they've got to get to that next level of sales. And how are they going to do that? They got to get increased distribution. They've got to improve their margins. They've got to continue to improve their margins. They've got to get Cybertruck ramped up, and yeah, I mean, those are, and then they got to get this Model 3 Highland ramped up and into. Remember, Model 3's been kind of, it's been ramping in China, and then it's, been, I wouldn't say it's at full production in the US, given this changeover. So they got to get through this changeover of the Model 3. And, that car could, that could be a pretty big, remember, Model 3 was 25-30% of unit sales. So there's some big factors, I think, that'll drive forward sales going into the following year. But just really increasing distribution, new Model 3, Cybertruck. This will be the biggest year of new product introductions in Tesla's history. And so yeah, I think those would be the things that would be meaningfully driving more sales. And of course, finally, the $7,500 credit going to point of sale.
As of yesterday. Okay, good. So can I put you on a spot, Hans? Do you want to guess? Did we hit the 50% average growth target that Tesla has been saying that since 2020 that we're supposed to hit with the 1.81
I think
million
so.
sales?
Yeah.
Well, we did. So in order to hit the 50% growth target, we needed to have 1.686. And we hit 1.81. So this is a fantastic table from Dylan Loomis from Electrified. And this is the global deliveries, right? So you can see that this is how many cars Tesla has delivered in 2020, 499. Here we are at 2023 at 1.8. This dotted white line is the growth target that Tesla set in 2020. They said that that over the multi-year averaged out each year, the average should be 50% growth from the 499, right? And so in 3 years in a row, we've hit exactly what they were saying. And then, again, they don't have to hit it 1 year or two, just in general over time. And so here, just for people to realize that we are on track to this 50% growth that everybody's saying, because that's the opposite of what we're hearing from everyone else, right? This is 3 years now achieving his 50% growth target. And this is what Dylan wrote down, which is exactly what Tesla said. Here's what they said. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. The rate of growth will depend on our equipment capacity, factory uptime, operational efficiency, capacity and stability of the supply chain. These things could make us at a 1 year, they don't hit this 50%, but they are on pace. And yet people are already talking about them not hitting it. What do you guys think about this comment here?
Yeah, I think the comment's interesting is that there's no there's no reasons for demand in their set of comments. Like, we're going to hit this number as long as there's nothing blows up from a supply perspective or the ability to manufacture. So it just shows that they're extremely confident in the demand side of the equation.
Yeah, and the fact that they were able to deliver, the number of vehicles that they delivered this year, I think is a good demonstration on that point. And, I'm sure some people, it's selling at lower prices and maybe with lower margins than some people would appreciate. But at the end of the day, the mission is to accelerate the transition to a sustainable energy future. And so this is very much on mission. And I like seeing the fact that they were able to do what it took to deliver these vehicles, still maintain profitability of the company. It maybe wasn't as profitable as some people might have liked, but the vision and the cash flow, like the situation and position of the company, all of that is still in good shape as they move forward. And remember that as long as we are growing the fleet size and as FSD continues to increase in functionality, regardless of whether or not you think we're going to get to a robotaxi future, there should be some sort of SaaS revenue that can be generated off of that larger install base. And, we're in a good place getting those vehicles out there on the road, getting them sold, getting them in the hands of customers, for, both the benefit of the long-term mission, but also the benefit of having that installed base for future SaaS revenues.
Yeah, I think the other thing that is missed by people, I know I see there's prognosticators on X talking about 2 million or 2.1. And there's a chunk of math that I think people are missing, and that math is around EV adoption. And so if you just take North America for instance, North America is going to end this year at somewhere between 8 and 9% EV adoption on a SAR, which is the retail component of car sales in the U.S. of somewhere between 15 and 16 million units. So call it 15. And then, so call that number, 9%, call it, 1.3 or somewhere in that area. Well, if it's going to be 15 or 60, let's say it's flat. Let's say the SAR is flat next year. So I think if they're projecting 16 million units, say it's 16 million units. And then say the EV adoption curve goes from 9 to what? 8 to 9 to 12. I mean, is 12 a reasonable number? If it goes to 12%, now you're talking about 12% on a SAR of 16 million. Now you're 1.9, almost 2 million cars. So you're going to go from 1.2, 1.3, EVs sold in the US to 1.9. Well, who's been adding capacity in the US and abroad? Who's been installing cell capacity, pack capacity, final assembly capacity? Who's been doing that? It's been Tesla. The others have been pulling back. They've been firing shifts. They've been laying people off. They've been purposely coming out with notices saying they're delaying CapEx purchases. So people are going to basically, people's cars are aging. They're going to be in the marketplace. We have all the surveys that talk about anywhere from 30 to 50% of new buyers that are prospective new buyers want to buy an EV. Only 8 to 9% of them are buying them today. So EV adoption, there's this magnet that's going to be pulling, car sales, and that's just a U.S. picture. It's the same thing going on in Europe. It was even faster in China. So Tesla doesn't have to be number one in every region, but if you just look at what's happening, you're like, well, how are they going to go from 1.8 to 2.3 or 2.4 or 2.5? I just showed you that. In the U.S., there's going to be 600,000 more EVs. Right now, Tesla's shipping half of them, or about 60% of every new EV shipped is a Tesla. So they may get a couple 100,000 just in the U.S. alone. We'll see how it happens. And then the way the tax credit came out, it favored Tesla because they have a higher percentage of their fleet on the tax credit versus anybody else that's selling EVs relative to everyone else. So a lot of things just pointed in Tesla's favor as to how you get to this next number. And now you just got to put together the math. And this is without even increasing distribution of the product.
Okay. Do you guys have a guess on how many Teslas cumulatively have been delivered by now from its inception?
I
I
think
have a
5.5
table for
million.
this. Yeah.
You got it. It's 5.5 million. But this is a great visual from James Stevenson, and he shows global vehicles sold by year. And of course, we're starting here. Where are we now at? Yeah, 2008. Now we're at 2018 and 2020. You're talking 1.5 million. Just at 2020, it was 1.15 million. Now at 24, we're at 5.5 million. That's the interesting part. How just quickly it's grown. How long it takes. Oh, sorry, it's on a loop now. 2008 was 90. Oh, look at that. 2012 is almost 3,000 cars. That's all they did. 2019 was 67,000 cars. And now we do that in a quarter. Like this quarter, we were disappointed that we did hit 500,000 cars, right? And this is everything that they ever made in all of 2020, which is like literally just a few years ago. Brilliant.
Yeah,
brilliant.
One of the additions I was going to make on.
Go ahead. Sorry, John.
Oh, if you're going to talk about the chart, go for it, Jeff. Yeah, I'm going to take us off of this topic. So.
Oh, I was just going to say, yeah, thanks. When you're head of supply chain, you just take this chart and you walk in, to any supplier meeting. You've basically, anybody that's partnered with Tesla since 2013 or even earlier to now has been able to ride that wave. And have just I can't overemphasize the compounding effect of having every year being significantly higher than the prior year, and you have this 1.3, even this 1.3 to 1.8 is massive for any. If there's a company that supplies whatever the door handle, and their numbers, or they're probably dual source, but whatever, their numbers relative go up that much in a year. I mean, just think about it. If you had your own business and you were selling widgets, and the number of the widgets went up by 50% in a year. If you look at that 930, that's up 40-50% every year. It just what you do is you pour all of your resources, you put all of your attention, you put all of your best people onto the Tesla projects, because you don't want to lose that business. And then all those best people are going to figure out how to take cost out, how to make quality better, how to deliver faster, how to get a better contract with Tesla. And so, I mean, we don't talk enough about it. I talk about it all the time, but just in general, this is a magnificent chart to be able to walk into a supplier and saying, well, this is what we've been able to create for you on the product side. This is this is the demand. This is the business it gives you. Now, what can you do for us? So we can take this from 1.8 to 2.4 or to 2.5 profitably. And then, I'm sure Tesla's got a chart that builds this out to the, 5 to 10 million range. And it's really getting suppliers excited to want to work with them and want to innovate and want to figure out. And Tesla can connect all these dots together and say, look, we want to build the next vehicle that's going to be half the price. Half the cost of the Model 3 and Model Y platform. So what group of parts you have with us, you're going to work with us to figure out how we take half out of that cost structure, and you're going to be part of that solution. So the amount of partnering that you can do and the amount of power you have within working with the supply base when you have a chart like this is intense. Now, contrast this to what's the message that a Ford, a GM, or others, what does this chart look like for them? It looks terrible. It's flat to negative growth on the ICE side, and it's these discontinued bars on the EV side, where now they're pulling back in investment. So they're really, really in a good position. When I look at these delivery reports, I always kind of look through that lens of like what it means to them from a supply chain perspective, and it's very meaningful that they can grow like this.
Yeah, the point that I was going to transition towards is just looking at, the fact that we don't expect to see that next generation platform deliver any meaningful volumes. Maybe they deliver first units by the end of the year, maybe not. Either way, we don't expect that to really change volumes this year. That said, I think the Model Y is still in a position people underestimate its ability to grow moving forward, its deliveries. And we know that over the past week that they had downtime in Texas, so there was no vehicle production since before Christmas, in Austin. And I know that there's a lot of maintenance that's going on there right now, as well as, potentially some other things that they might have been, basically just nagging things that they've had band-aids on over production in the Model Y for a while, that they couldn't do upgrades. I mean, a week and some change is longer than that line's been down now for a while. And so that may actually allow production of Model Y out of Giga Austin to grow significantly. And when you couple that with the point of sale transition, for the Model Y, and just how affordable it is here in the United States and then in a number of places around the world, I think we still have significant upside in not only capacity but demand for that product.
Yeah, that would be a great question for Tesla, or if you could get Elon in an interview, it's just to put it right at him and just say, what percent of distribution do you think EVs have penetrated, and what percent of distribution do you believe the Model Y? It's the number one selling car in the world, but if you just group the 3 and the Y together, what percent of distribution do you think you're in? And I think the audience will be surprised at how low of a number the response that you'll get. And that's one of the reasons Tesla wants to move into that 20 to 30K range, because then now you have this whole new pool of distribution to go into. But I would just say, if you look at the current distribution where it is today, I mean, people have to remember, like with smartphones, for example, I think there was a good tweet out there that we're at, like, I think smartphones are up at 6.97 billion units of distribution now cumulatively, but that number annually it's like 1.2 billion, but that number started, I remember when it started, it was under 5 million in the first year, and then it grew to 20-30 million. It took a period of time for that growth to happen. But I think when we were 5 years into that journey, 8 years into that journey, we didn't know it would be over 1 billion units at that price point. We just didn't know that. We didn't project, like, the app ecosystem, like this would be such a necessity for people at this price point, because the price point for that product was so much higher than people were paying for the prior version of product. So just, wow, it's pretty good that you can just pull this stuff up pretty quickly. But yeah, I just, when we were in that journey, we did not know how far and how wide would have actually. We knew where our points of distribution were. We knew where we weren't, and that's the question that would be interesting one to get to Tesla about where they think they're at today on 3 and Y in terms of distribution, because it's a little bit more complex. It's actually not too much more complex. There's an infrastructure side to both smartphone and EV side, but the infrastructure side and EV, that's probably one of the bigger issues blocking further distribution. So anyway, just the point of it is, I think we're to add on to Hans's point, is just where I think we're we're in the early portions of this journey.
So let me ask you guys this question, right? So Tesla just hit 1.8 million cars, as we showed in that table earlier, that we're still on track to the 50% growth on average, multi-year average of deliveries since they made that statement in 2020. Tesla still has not changed their guidance that they want to get to 20 million cars per year by the time of 2030. Most Wall Street analysts still are just thinking that they're never going to get to 20 million. They'll get to 10 million. When you look at something like this, I just bring it right back to here. When you look at that, I mean, they're showing that they're able to continue growing this, but what's the chance that they're going to get to 20 million by 2030? Why don't each of you guys answer that question? Yeah.
Well, the first thing is Wall Street is at 5.8 million. And I think
not 10 million. They're five. Okay, Wall Street themselves is 5.8.
Yeah.
Gary Black's at 10 million. Oh, by 2030, that's how many? 5.8 million in 6 years.
Yeah. So I mean, I think there's a big surprise in store. It's going to take segments of vehicles, maybe some segments we haven't even thought of. But yeah, it's going to beyond the $25,000 personal use vehicle. You'll probably need this fleet element. You probably need different categories of product to get there, but it's going to get there. It's the better product. When you look at the feature value, the whole piece of it, of like, what performance am I getting at what price point? This is why Tesla destroys everything in its price tier. Like, if you just look in North America and you look at vehicles sold between everybody's, it's interesting. Some of the bulls on Twitter are like, why aren't we selling every single car that's above $40,000? Why isn't every car not a Tesla? Because it performs. Well, that's just not going to happen. But if you look at it, if you look at the market share that Tesla gets in those segments that they participate in, they dominate. And EVs are a better product, and Tesla makes the best EV, and they're continuing to make it better. And they're making it better on many different vectors, both the features that consumers see, but also the value they get in terms of what they're buying, in terms of the performance of the vehicle. So, I mean, that thesis alone should carry it. If there's 80 million vehicles still be one of the things that could break down that thesis is there's not 80 million vehicles sold annually per year. That number declines. Do we go to more robo taxis for urban areas? And that's the only thing I think that could break down that thesis. But EVs are the better product, and Tesla knows how to make them better than anyone else. So I think they're in a good spot to continue to grow.
Yeah, I think I would echo a lot of that. I personally think that the 20 million vehicle target might be a little bit beyond reach, but if it slips, it won't be by much. And so I think personally, I would expect us to land somewhere between 15 and 20 in 2030, and then to hit that 20 million vehicle rate somewhere shortly thereafter if we don't make it by 2030.
Mm-hmm. Yeah. Okay. So let's take a look at what Gary Black is saying here. So he just, first of all, he said that, Tesla delivered 484,000 vehicles in Q4, easily beating the investor compiled Wall Street consensus of 480. So they beat that. Fourth quarter deliveries could have exceeded 490. So he recognized as well that 6,000 vehicles were not turned back because of the bed bugs, sync bug infestation. It would have been even 490. That would have been just brilliant. And then production was 495, which is in line with our expectations. And then the surprise for them was the 23,000 other models, which includes an unknown number of Cybertrucks. And then he's saying that wait until fourth quarter earnings, which is now set for January 24th. That's when we're going to see auto gross margin. Wall Street's still thinking 17%. Jeff, where are you with what you think? Some people are warning that in the Q4 margins is going to be a lot less than we think, even possibly lower than 70%. Where are you standing on that?
Yeah, I think the S and X being way ahead of consensus is a favorable aspect. The lease piece of it, at least on the sales side, will be another favorable bump. I mean, I guess I'd have to look at again, like how far and wide were any of these inventory discounts. Usually, that's on, thousands of vehicles. It's not on, a large portion of the quarter. So we'll have to see where that comes in. We'll have to see where FSD comes in. That solution's getting, increasingly improved. They'll have to see how it sounds like Cybertrucks did not go out beyond employees. I'm not 100% sure on that. But if that flipped from being kind of an R&D project to being a production project where there's actual production, there was sales to those end consumers. I just have to see how those first Cybertrucks are classed, and there's a couple of things I would just want to understand, and how that would weigh on margins. But I would be leaning more on the favorable side of the 17% than there's being risk to the 17% based on what I described earlier.
You, Hans?
Sorry, remind me what the question is.
Margins for Q4 that they're going to report in 3 weeks from now.
This isn't something that I track closely enough to have any sort of educated guess on. Unfortunately, it's just not a question that I'm the right person to ask.
Yeah. Okay. It can go either way. So let's ask 2024. So here's Dylan from Electrified, his chart again. In order to hit this 50%, again, you clarified already several times, this is average. It doesn't have to happen this year. But if it were, it would be 2.5 million cars need to be sold in 2024. We don't know what their guidance is. Would they give us the guidance in January 24th, right? In 3 weeks from now, they'll give us guidance for what they think in 2024. Many people are saying, hey, set it for 2.2 million. Larry Goldberg thinks we're going to hit 2.4 million. Most people are very, very pessimistic about 2024. Where are you at, Jeff? What do you think is your target of what the deliveries will be for Tesla?
Yeah, I think Tesla will do a range again. I think 2.2 will be the low side of the range, and 2.4 will probably be the high side of the range. And then, by the 24th, they'll have a couple of weeks. I don't think Tesla has actually turned on the point of sale discount yet. I think there's things that they have to do on their side from an accounting and from a systems perspective. But the day that they turn on that point of sale rebate, I think Tesla is going to want to see a number of days of sales with that on to understand what they need to do with inventory levels and where they think sales and orders are going to come in at. I also think you're going to see some Model 3 pricing moves. So if the Model Y with the rebate is much lower, I think you are going to see some Model 3 moves to clear out the rest of that inventory of the existing Model 3 in North America. Again, I'm speaking more about North America at this point. I think China is going to surprise us. I think their government, they're not going to allow that slow recovery to just continue. I think their government's going to massively stimulate their currency, and I think China is going to wake up, and we already saw that happening in Q4 with record numbers. I think that's going to continue. Teslas are, they like their local brands, and the local brands are going to continue to ramp up. They're going to continue to have great growth, but Tesla's going to grow along with that. And I think they're going to do very well in China. And I think North America with the rebate, I think they're going to do very well. So I think there's going to be a couple of surprises. I think the beat goes on with EV adoption. I think this media campaign, if you really start tracing it back, it goes back to ad dollars to the big three auto. It also goes back to, and this isn't a conspiracy theory. You just look at how these publications are funded, and it's pretty clear. So I think it's going to backfire. I think people are more interested. I think as the price between an ICE vehicle and EV vehicle continue to, basically cross over each other, where EVs will probably be cheaper this year, the ones made by Tesla, than the average ICE transaction. I think the beat goes on with EV adoption, and I think that's the part of math that people are missing. I think people are. You can think about sales in a number of different ways of like, well, how many more people really want a Model Y? Or how many? This is what people understand is they don't understand the total available market, and they don't understand what percent of distribution are you in versus you're not in. And they also don't understand word of mouth. There's a number of different factors, I think, that at play, but to me, that EV adoption magnet, I think that beat's going to march on. And we're going to reach this critical point where it's kind of going to be the point of no return. Because basically everybody that buys one of these things says it's better than the other vehicle I had before. And then they pass that on. So anyway, I think 2.2 to 2, it's a long answer, 2.2 to 2.4. I think it's going to be driven, by EV adoption. I don't think they're going to do massive moves on pricing, but I think they will continue to move on pricing as they bring their cost structure down.
Okay, I want to address that because 2.4 to hit 2.4, you're saying just Model 3, Model Y, but this year we might actually have a production line shutdown for the revised Model Y in the second half of this year. That could happen, right? That's expected to happen at this point. It's going to happen this year. But you think that you don't need, you're saying though that you don't think you need to have net, like here's Dylan. Dylan was saying that even if Tesla misses the mark of 2.52 for 2024, because we're in an intermediate growth phase. This is before the next gen launches. So some people are thinking we're already at that point where you need to get a net new market. And Cybertruck is still ramping. You got the Model Y, but the Model Y is, you think we can hit the 2.5 or 2.4, right? Based on what I just said.
I mean, that's what I say. That's the high end of my range. I mean, I give a range of 2.2 to 2.4. I'm saying 2.3 most likely, but and then we'll have to see, how the year unfolds. But without a new vehicle, I definitely see that.
Mm-hmm.
I would just say that I would be surprised if we see a Model Y Juniper refresh this year. I kind of wouldn't expect to see that until we see the next gen vehicle rolling out, which should be, better for deliveries for a Model Y this year. And also, I don't expect this, but I also would not be surprised if this year we hear a revision on the 50% average annual growth rate expectation, that it might get revised down. I definitely expect that sometime in the not too distant future. Obviously, the next gen vehicle has huge opportunity for growth. And in the steep parts of the delivery growth curve from the next gen vehicle, I think we're going to exceed, far above 50% in those years. But if you start looking at a multi-year average again, the closer we get to 2030, the slower we expect that growth rate to be. And so at some point between now and 2025, 2026, they have to say, hey, we're not going to continue to average a growth of 50% per year. So it could be that we hear rumblings of that this year. Maybe it's next year. But definitely sometime in the not too distant future, they're going to pull back on that 50% number.
Yeah, they have to. I mean, just numerically, it's math. They'll have to.
Yeah.
But
I just don't see them making that change before the compact car comes out. That's going to completely dampen the their bullishness of what the compact car could do, and the compact car should be able to accomplish the 50% growth in the next couple of years.
Well, the question is, because they gave us that last one in 2019, right? And they're saying that we're through 2023 now into 2024. That's 5 years worth of growth. So if they're thinking about it over a 5-year time horizon, then yes, you could have a couple of years where next gen vehicle blows it out of the water. But can that get us, if we get into 2025 and they haven't revised that guidance and they're thinking in 5-year time spans, then you are getting all the way out to 2030. And so,
but how do you get to 20 million cars by 2030 if you don't keep this guidance? That's unless you're thinking that they're going to say, I can't produce 20 million cars in 2030.
I don't think you need 50% all the way to 2030 to get to 20 million. I think that 20 million is less than that in the back half of the decade.
See, Paul, I just said the same thing Paul said.
No, it's less than that, I think. I'm pretty sure. I need to look at the numbers on that, though.
Okay. I mean, in 6 years, right? We're 2024 now. We're talking 6 years. And again, if you look back where we were, do I have to do this again? I have to show this again. Look at where we were 6 years ago. I mean, I know you can't do this. This is like the law of large numbers as we get here. But, I'm just saying exponential growth. You're talking bots. You're talking unboxed model. There's continued innovation that Tesla continues to do. They're able to produce factories faster because this is not their first rodeo. With the factories that less, 50% space required with the unboxed model. Do we know the unboxed model what increase in efficiency that's projected to do? They just said 50% the cost and they said 50% the space, but they didn't say how much more cars you can deliver because of this. Jeff, what do you think?
I mean,
Well,
the
I
one
mean,
thing
you
that we
Go
yeah,
ahead,
the one
Dan.
thing I was going to say that we do know is that, you know, the volume of cars sold below 30,000 like far exceeds the volume of cars sold above $30,000 price point. And so the addressable market is 5 or 10 times the current
I just
total
want to make a
addressable
point.
market.
Everybody, the last several months has been just hammering home how BYD is about to take Tesla's lunch. BYD is you cannot, be afraid of BYD. And I'm like, well, who should be afraid? Shouldn't BYD be afraid? Because in a couple of years, when Tesla launches a sub $25,000 car, whose market share is going to get hit hard? Whose sales are going to get hit hard? Is it more likely BYD is going to eat Model Y, Model 3 sales than it is for Tesla to totally demolish? I mean, not demolish, but I mean, take a big chunk of it, right?
Yeah, it is as you described it, Herbert. That Tesla is they've sold more pure EVs this year than anyone without participating below 30,000. When they actually start participating below 30,000, that number meaningfully grows, and it eats into BYD. It eats into many of the other Chinese automakers. The ones that are actually in real trouble are the GMs, the Fords, the VWs of the world. They do not know how to make a profitable vehicle below 40 or even 50K. They don't know how to make. Remember, the last reported sales we have from Ford is they're still losing over $30,000 a vehicle. Same with Rivian, who you would expect, they're a startup. But Tesla's living in a world right now where, they're selling, $35,000 to $50,000 to $60,000 vehicles, mainly outside of S and X. And they're making, the 16, 17 points of margin, and they're profitable. They're throwing cash off, and everybody else in that same that's trying to sell vehicles in that same area are literally losing their shirts. They're losing $30,000-$40,000 a vehicle trying to do what Tesla's already doing. So I just sometimes we kind of gloss past that, and now take that and extrapolate it down to the $20,000 to $30,000 range, which Tesla will do profitably when they get there. It's it just shows you how far behind I would say some of the other competition is, and I can't overemphasize that. When we get into 2025, when Tesla's introducing this vehicle, maybe GM or Ford are going to have a new truck or a new Equinox or something to introduce in the $30,000 to $40,000 range. They're going to be where Model 3 and Y were, maybe in the 2017 time frame where Tesla was. So I can't overemphasize how far behind some of these competitors are. I would just say in China, we don't understand exactly what they're reporting, how they're reporting it. They're selling a lot of vehicles. I think the question is going to be around profitability and their ability to scale globally. And I've been through this before. I've seen it before. I know there's some debates that are happening online as well. It's not going to happen just like the smartphone. I can guarantee that for many reasons. There's a lot of regulatory, there's a lot of tariff, there's a lot of national interests around auto industry, and they will protect that industry. There was no U.S. smartphone industry, just for the record. There was no and I produced a U.S. made smartphone, but in general, there was no industry to protect here on our soil. So it's going to be very different for them. And I think they're going to get increasing regulatory and tariff scrutiny in Europe, where they're kind of getting away basically for free right now. I think the noise level on that's going to ramp up tremendously. So back to your point, Herbert. BYD is the one that actually should be looking over their shoulder for the reasons for Tesla entering that price tier, and I think for increased regulatory scrutiny that they're going to get.
Okay, so
I guess
a lot of
the one thing
go ahead, Jeff,
I would
finish.
say on that is that I would expect them to find, just because from a simple cost of goods sold perspective and the market demand for EVs, I don't know exactly how they're going to get these vehicles out. But I think while there may be some loss of share in China for BYD against the Tesla next generation vehicles, I think those vehicles that BYD is making are still higher quality and more profitable, more marketable vehicles than a lot of the other legacy vehicles that are out there. I think people are going to want EVs over ICE. And so I think that they'll be able to find a home. I think that, really and truly the majority of the lost sales and lost market share end up going to companies like, Toyota and GM and Volkswagen, these type of companies. And that as long as BYD can maintain their position relative to Tesla as the second best company, that they should be able to figure out how to, put those vehicles in the hands of customers somewhere and do so profitably, even if that means doing partnerships and, manufacturing vehicles that are badged Volkswagen and, they're brought into Europe as a Volkswagen, but they're actually manufactured in partnership with somebody like BYD. Something like that is what I would expect to see.
Yeah, the only
Okay.
problem with that, not to debate it too much, is there's not a lot of margins to play around with. Like in the smartphone world, depending on the tier of the device, you have anywhere from 20 to 40% margins to play with. So if you want to do joint venture type activity, JDM type activity, there's a margin pool to split and to work with. And I know some of these are sprouting up in the auto world right now, but I just don't. I actually kind of think that they're just kind of a one step from the grave kind of thing, and they're kind of just a little bit of a delay. I don't think it's going to be meaningfully accretive for them. I don't think this whole new market's going to open up, and they're going to have some massive quarter because they did some partner. I don't see that. I think it's going to delay the inevitable. To be honest with you, they've got to be able to localize production. They have to be able to automate. You have to be able to take their cost structure down, and you're gonna have to get rid of all these different middlemen in the middle, which is what Tesla's been able to do with their ability to localize production in all these countries. And until they're able to do that, I think a lot of these companies they're gonna struggle, whether they're legacy or whether they're Chinese or what have you. So. But yeah, that could be a debate for a whole other show. But I don't think Tesla's going to sell every car, and there's no one else besides Tesla. I think the Chinese are going to do well. They're going to be strong number two. But I think there's a lot of things they need to be looking over their shoulder with as it relates to Tesla.
Okay, so here's where we're at, right? So Tesla this morning announced that in Q4 2023, they delivered 485,000 cars. Produced 495,000 cars, and they're at the 1.81 million cars delivered for the year full 2023. So I wanted to ask you guys, there's in the Tesla retail community, investor community, some people are saying this doesn't matter, right? This is just 2023, and we're on what matters is 25, 26, 27 as we move forward. How would you guys characterize the importance of this news this morning?
I mean, it's definitely necessary, for us to continue to hit our milestones. It's good to see them hit their targets, as we said. I think ultimately in the future of Tesla, it is, relatively insignificant compared with what the overall size of the energy business can be, what the overall size of the Optimus business can be. And so for people who are retail, who have the time horizon and the really the risk tolerance to be looking at those types of opportunities, it probably is less significant. But that doesn't mean that it's insignificant to the share price today, because there's a lot of other people who have a lot of other concerns who are interested in news like this that confirms progress. So this is, something that's going to be much more important for definitely all institutional holders, but then also a subset of retail investors as well. And so, you can't have one without the other. Like, we need the core auto business to continue to execute well along the pathway from here to a place where we do have, an incredible growth in the energy business and incredible growth in things like potentially Dojo or full self-driving or the Optimus bot. And so I would say, it's not an either or proposition, and we do need to at least monitor the health of the business that's really paying the bills for the projects that we want to see that are the big time moonshot long term projects.
Yeah, I think that's a great point. And if you look at today's market, the Nasdaq's down 2%. Normally Tesla would be down, 6%, right? Something on a number like that, or 5%, and it's basically flat. It just tells you the market is reacting, really well to this news. It wasn't any surprises. They've missed, a number of quarters over the past year, missed the, depending on what consensus view you look at. So this was a clean beat. I think it's being perceived very well. I think it is, it is required. Obviously, it's necessary for all the future efforts that Tesla's going after, and it really shows as others are capitulating. From an EV perspective, that Tesla, they put out a quarter of strength. This is a sign of strength when others are barely able to produce 10, 20,000 EVs, and Tesla, has a record quarter, record production, record deliveries. It really kind of puts some of that media commentary to rest. Some of the media is starting to get this right and say, look, this isn't an EV problem. This is Tesla. People want Teslas. And the other EVs have, these products have to be better. So I think it's significant that they put these numbers up. I think they could have been, I think production, like we said, could have been higher. Deliveries could have been higher. There's some opportunities left on the table, but that's going to happen every quarter, just so everyone knows. There's always opportunities. But this is great to see. Now all eyes are going to be on, was that a trough in gross margins? And what are they going to do that? And then what are they projecting for the year? I think all eyes are going to be on that commentary in about 3 weeks.
Okay. Well, I mean, for me, it's like, it doesn't matter if they were off by 10 or 20,000, but it was a beat of expectations. So that's good news for us. End of the day, it shows the progress. It shows how incredible they can execute on a terrible, terrible, difficult year with interest rates rising and what they had to accomplish to get here. So that speaks more volumes for me, for a company and a product, and we're looking good. Thank you, everybody. Appreciate you guys jumping on and getting your feedback, Hans and Jeff. This was great. Thanks, everybody. Talk to you soon. Bye-bye.
Thank you.